Welcome, welcome, welcome. Market Mastery for the week. Let's get you set up and squared away. I would argue the most valuable hour you will spend on the internet this week, setting yourself up to make money. Joined as always by the handsome, the beautiful Shay Boloor, Stock Savvy Shay, the guy. And dude, we have been on that juice. So I want to do a quick, I'm going to recap for you guys very quickly. So Porter was kind enough to break down our trades from this stream for like the last, I think this is for like the last 3 weeks, which is madness. So I'm going to go ahead and share this for you. I'm going to share the Discord here so you can get a peek at this. So he recapped all these for me. Said if you want to recap them on the stream, this just blew my mind. So remember, we talked about the 519 calls. That was on the 8th. Boom. We hit 518, 519. Then we talked 521, 524. All the targets hit as high as 531. Those contracts ran 263% from 335 to 1215. GameStop, we talked about a breakout over 13. You all know how that went with our final target of $80. That one we outlined in detail. It's 515%. Apple, same thing. Hood, one of my favorites, from $8. Those were our targets. 10 through 21 have been hit. Now we got 30, 33, 50, and 85 as our like Hail Mary long-term target. Baba, that was a hell of a ride. We were adding down to the 65, 67 bucks. That's already up about 13 to 30% depending on entry. And then it just goes, list goes on and on. So Shy and I broke down SMCI. Why was it still a good buy? 36% since we mentioned there. We broke down NVDA. Why is it still a good buy at 869? 10% from there. We talked about Trade Desk. Why is it a good buy from 60? 60% from there. PBI, that was separate stream, so I'll throw that one out. SLV, that one I know I covered on this stream, 46%. NEE, 31%. YMM, that was a user submitted one, so thank you guys. MO, that was also one you guys wanted me to look at. Now we get into the good stuff. Rocket Lab, that was a Shy special, 23% from that buy. We did it here live. The triples, MMMM, great dividend payer, long-term hold if you like the industrial. 6 to 11 run, obviously played it twice for 100% both times. Lucid, absolute garbage, simply a technical trade. Garbage company, fun technical trade, 30%. JFin, not a great company, good technical trade, 20%. KLU, same thing. And yeah, I just wanted to like thank you to Porter. This is how hard this man works, tracking a million different trades all the time. So let's give this man a round of applause for tracking all that. We appreciate you, my friend. I'll give you a nice fancy golf clap. Makes it possible to really track and for us to understand like the value that we're offering to you in the trades that we're talking about, the long-term investments we're talking about. Because again, the beauty of this stream is that it covers everything from fundamentals to technicals to overall market sentiment. It gives you everything you need to be successful. That's always been our goal from day one of doing this together. We realized that we were the perfect combination. It's kind of like, for anybody that's seen Power Rangers when they assembled the Megazord, dude. This is the Megazord. Independently, it's still very strong, but together they can defeat anyone. And yes, I know you want to cover Zoom. We'll get into it. So I'm gonna slip this over the chart. I just wanted to give that man a little highlight and how hard he works, but also like, dude, this stream has been straight juice. I don't know how you've been feeling about it, but dude.
Oh my God, dude. First off, all the names you covered, they aren't the easy money names. What I mean by easy money, Mag 7, not one Mag 7 names. And those are the outperformers. Those are the names that are kind of like holding the market together. Not one of those is really in the Mag 7 names, except for NVIDIA, fine. But NVIDIA, when we got into that, a lot of people were like, all right, this is the end of NVIDIA's run. Like it's going to pull back because it's ran up so much. No, we had the kahunas enough. It's like, no, this is a slight hiccup along the journey that they're going on of $1,000 at least. Yeah, we'll find out this week.
And here they are now. So let's talk. Let me get this up on the screen. So we're going to just give you a little highlight of what's to come. So we're going to talk NVIDIA. We're going to break this chart down, talk for a minute about the business. We're going to give this about 3 to 5 minutes. Then we're going to move on to SMCI, and then we'll get into the SPY. I want to ask your thoughts on this. So obviously this chart is saying, hey, we got some strength, but we still see indecision. right now, options chain is pricing in an 8% move. Interesting, because I believe the last 4 earnings estimated move was 11 to 13%. So decrease in volatility. Does that scare you at all?
It's consolidating a bit. Like here's a reason. CapEx for the big tech players, that's your easy pre-read on how Nvidia is going to be doing.
Explain that.
CapEx, like the Metas, the Microsofts, like the Googles, like during their earnings cycles, like which was 2-3 weeks ago, they show how much working capital they invested in for the hardware component of their cloud or whatever products that they have, and they prove that it's re-accelerating. Like they're spending more than they did prior earnings. So that just shows, all right, if the big tech players like the Metas, the Microsofts are still spending and even more on Nvidia's chips, party's going to be continuing. And because we got that read through of like, it wasn't like some heartburn of like, oh, this name was bullish, this name was not so much. All of them had increased spend. That just shows, all right, near term, I don't anticipate much volatility in Nvidia's earnings because of that read through we had from all the big tech players. So worst case scenario on Nvidia's earnings is whatever their guide is, because we already know their top and bottom line will be easy beats because of those read throughs from those big tech companies. It's all about the guide. It's not just all about the guide. It's about how much they beat on their guide. It can't be a good beat. It has to be an amazing beat on their guide. And it's just the scale that they're at and the expectations. I've never seen something like that before. But again, there's been 3 straight earnings for them where people expected them to pull back because they had an absolute home run earnings of the prior cycle. We still haven't seen that is the case. So like, what is your bearish argument for Nvidia right now on them going down 8 to 10%? It's throwing a dart, honestly, because we already got the validation from the big tech names. And the only hesitation, like the reason you still see 8%, in my opinion, is because a lot of the hardware names, they didn't guide up as much as you'd want during this recent cycle. Like the TSMs, the ASMLs, like these core kings of the digital, semiconductor ecosystem really didn't guide up as aggressive as they've had in the past. But it's because they're not really exposed to the data center and GPU component that NVIDIA is in, where there's a significant gap still from what NVIDIA's H100 and Blackwell chips are to second place, which is the AMD 300 chips, which still isn't really a thing yet. It's still more of a story than actual proof of validation data. Like we're seeing like, yeah, it's picking up steam, but it's nowhere close to NVIDIA. So again, NVIDIA's in its own separate category. And worst case scenario is just going to be the guide isn't as aggressive as everyone would want. And you probably see the stock going down a couple, maybe 5 or 6% if that's the case. And again, it's going to get scooped up V-shaped recovery because you're seeing the big tech players spend to fuel this AI demand. And until that stops, the whole party will continue on the hardware space.
Yep. Yes, it does. And that's what interests me the most. So put that into context, right? Where we are at NVIDIA, where do you think we are relative to SMCI and NVIDIA? How would you compare them relatively in terms of the growth story? Where would you say SMCI is at versus where NVIDIA is at?
So I think that's a good question. First off, right? SMCI it's just a server company. They don't own an IP. They have no competitive advantage at all. And you're seeing that with Dell. It's like picking up steam and eating their lunch right now because there's not really any kind of different, like they're not that different. Like it's a server company at the end of the day. And they have a great relationship with NVIDIA. The CEO of SMCI and NVIDIA have a great relationship together. They're like cousins, but not really family members. Like that's the kind of relationship they have. They're like really good buddies. And they took advantage of like the first user advantage of the data center revenue. So to answer your question, SMCI doesn't really have a moat. And because it's not a secret anymore how explosive AI is becoming, and specifically in data centers, you're going to see competition start to eat SMCI's lunch in the near term. Nobody knows when it's going to happen, but it's going to happen real quick because when you don't have a moat and you see someone succeeding great like SMCI, doesn't matter what competition you are, you're going to start replicating what they're doing because it's very easy to replicate. And I think their runway is a lot more aggressive. Like, it's going to revert much quicker than NVIDIA's, where NVIDIA, to go off your point, like they have a massive first user advantage lead. Absolutely. Their margins are going to start getting taken away from them, and there's going to be more competition, sure. But it's going to happen in a couple years. Where SMCI, I could see it happening in a year or two. NVIDIA, it might be multiple years. And why is that the case? When you have AMD and Intel like going into the space, it's because the innovation that NVIDIA has is mind-boggling. Where I said their first mover advantage for the H100 chips, they had a couple year advantage, great. But now we have the 300 chips from AMD. But when AMD's 300 chips started going to the market, guess what NVIDIA did? They created Blackwell chips, and they innovated that chip within a year, where before it used to be a couple years before these chip innovations. Now NVIDIA's making these innovations within a year. So as soon as AMD came to the table, NVIDIA was like, no, we're going to innovate, go back to the lab and like innovate even more your 300 chip that really isn't released yet. So NVIDIA is not giving the opportunity for these competition to start eating their lunch, because there are cycles for innovations happening rapidly, like the rapid speed, and it's probably going to get even quicker. So NVIDIA has a long runway. I don't know if they're going to get to 2,000, but I don't think they're going to get to 500. That's like what I'm trying to say, where SMCI, I could easily going back to wild to say, but like $300 wouldn't surprise me in 2 or 3 years, because their business model isn't scalable with their low gross margins of 20%, and they have no moats. They have no pricing power because they have no moats. And as soon as the revenue starts slowing down to like, I don't know, mid-teens, their valuation will get pulled back really aggressively, because why do you own it? They're not a scalable model. The high growth isn't there anymore. And it's a low margin business that really doesn't have a moat. So it's essentially like not commodity, but it's going to become a commodity in a couple years. And that's the issue with SMCI. And that's why NVIDIA, it's not a commodity, because they're constantly innovating and they're always going to be first place.
Yeah, they've got efficiency at scale. I mean, in any business, like that's where you like you can get destroyed. Like I think that's the biggest risk to small business, and that's kind of the argument against monopoly in general, is that when you become that big, you have entire departments that could capsize entire companies, right? Like I bet Walmart's payroll of one director is equivalent to like most companies' entire budget that are making $1 million a year, right? They're making 300-400 grand a year, decent margin, right? Like this is what I'm saying. Most small businesses operate at a slightly higher margin as long as the owner works in the business. But the problem is, oh man, see, so I don't know if I'm just I hate even saying this, dude. I feel guilty about this opinion. I just do. That I don't see it for AMD. I just don't see it. I want to see it. I want to see it so bad. I want them to win. I do. I want that to be the win. I'm just not seeing it.
Yeah, I mean, I don't blame. First off, it's hard to make an argument for something that's clear second place. Like, perfect example is, will the Clippers ever own LA as a sports town? No. Doesn't mean they won't win the championship. It's just like AMD, there's such a massive runway in that GPU space and data centers that there's going to be so much pieces of the pie to throw out there. But at a certain point, like AMD at 200 does not make any sense, because right now it's more of a story where like they're going to start eroding NVIDIA's market share. We haven't seen that yet. So that's more hypothetical, where you treat small caps in a similar fashion, where like, I believe this story, it's revolutionary. Haven't seen it proven on fundamental basis yet, but there's a high risk in that. So we'll see. At the end of the day, people just want to buy what's going to be eating someone's market share rather than someone who's losing market share. It doesn't matter how much of a lead it is. And AMD, they have a huge advantage in their gaming specific department, but in Microsoft, the relationship with Microsoft is like amazing. So if you think gaming is going to have a recovery, and you think the future of gaming is going to be rapidly different due to AR and VR, whatnot, like AMD certainly does have like an edge potentially in that specific section. But again, why not own the best? And I'm beating myself up a ton for selling NVIDIA in like the 500 to 600, because cyclical nature of NVIDIA put me off a bit, and I'd rather just own I have an edge in. Like I have an edge in small mid-cap growth software companies. Like That's my edge. I know I can see the opportunity and what's overvalued, what's undervalued. Cyclical businesses that are worth over $1 trillion. I felt like I was over my head. Like, I can't believe the way it's scaling. It's happening so quick. Cyclical nature of it is like making it unpredictable. I'm gonna profit off this massive multi-bagger move and fund it into my software names that I'm bullish on, that I know will capitalize on the same thematic. So again, I won't blame you for AMD of being like, why it's like not catching a falling knife, but like there's so much story being told on why they deserve a certain multiple, and who knows, that could be wrong. You missed out on this massive data center revenue market, and you could have just done it with NVIDIA by itself.
Well, let's see. So look on Twitter. I just tagged you. I just made a poll. Let's see by Friday. Let's see what the people think. Then we can cover it Friday.
I love it.
AMD, NVIDIA, or SMCI. Let's see who's got the most upside from here. I think that's worth looking into, because I mean, just also looking at this chart, I just I'm not a big fan. It's like, I don't like sympathy plays. I know a lot of people, they love trading those sympathies. Like, to me, it's like, I want the real thing, man. I don't want the knockoff. Like, I don't buy I don't want to. Not that I wear a bunch of Jordans, but like, if I bought a pair of Jordans, I'm not going to buy knockoffs.
Mm-hmm.
I get it. Like, I'm not knocking it. I'm just saying, pun intended. I'm just saying, like, you want the real thing. I mean, the idea is that the quality's there, that the value's there, and I think it's hard because, like, I love NVIDIA, fanboy, and I just love the growth, and it's made me so much money. I can't not love it. But
yeah,
I disagree. I don't like the monopolization. I don't like it. It shouldn't be. We need those checks and balances. But then it's hard because it's like, how do you fault them for just crushing it? You know what I mean? Like, that's not cool.
You can't.
So get an interesting point from Eric Turner. He says SMCI services. I don't know anything about this. Maybe you would. You're the cloud guy. It says SMCI services, NVIDIA, AMD, Intel, and Google Cloud and Microsoft. So
I
different value proposition there, though. That's interesting. I didn't know that.
Oh yeah, they're the
I don't know anything about SMCI, if I'm being honest.
Server company, but essentially the great picks and shovels play of the data center revenue. I got into SMCI under $100 because I saw that opportunity and sold out on, I think it was like $400, because like, end of the day,
you're up 400%. You got it.
But end of the day, like, they don't have just look long term. Like, cyclical nature of this massive explosion we're seeing in data center revenues will be temporary with the velocity it's at. It's gonna be going up gradually, probably after this massive velocity. But SMCI is just a perfect vehicle to capture that data center revenue velocity, because it's that picks and shovels play across all the names that Eric just called out. The issue, though, is when competition comes in and they realize all these kind of players like NVIDIA's, AMD's, and Intel, like, they're going to just go towards whoever has the cheapest price, because there's not really a clear advantage that SMCI has over Dell. And when that happens, Dell has the advantage because they've been around for such a long time and they have so many different lanes, where SMCI doesn't have much pricing power at the end of the day. And competition will kill them on their growth story. So you're absolutely right, Eric. That's currently right now, but you're noticing a trend where NVIDIA is calling out Dell multiple times in the past 3 months for partnership. Dell is starting to participate more in the data center revenues. You're just seeing increased competition in that space. And I'm a long-term 5+ year investor. I just don't see a long-term moat for SMCI. And that's why I pulled out at 400, which was clearly a mistake, but I'm not a greedy investor. Like, I know what stock has a competitive advantage, and SMCI doesn't.
You weren't using StocksBuddy, dude.
I wasn't using StocksBuddy. Yeah,
dude.
I got
to give this machine a shout out, dude. This little software guy. If you go to I use for this indicator, I use the monthly chart. It's like number one focus. It's like where you get the best juice. Bull signal, most recent bull signal, right? So the most validated signal, $25. Went to 1,000 with secondaries entries at like 20, 40, and then at 240. Unbelievable.
But no, it's a great vehicle to use to capture this data center revenue explosion. 100%.
I hate StocksBuddy, but I love it. I don't like that he beats me sometimes. I just don't enjoy it. You should never let a machine replace a man's work, even though it's more efficient. Is what it is. All right, that's enough of that. So let's move on with it. We're gonna get down to it. Let's take a look at another one we've been talking about, and then we're gonna dive into the SPY. I didn't mention this one earlier. Nope, not SPY, Tesla, because I think that's worth mentioning as we go into the SPY. So monthly bearish, still holding on. We've talked about our thesis. We don't need to get into all that with this one. Software play. If you have a brain, you'll see it. Inflows have been a little weak. Everyone's anticipatory and anxious about the shareholder vote. And, whether or not that gets approved is going to have a fundamental impact on the stock itself. Elon bounces. Goodbye. We're out. Just to kind of give you a quick recap. Buy, done. Sell it as fast as I can. I've even been anxious enough to consider selling some of it before the vote just because it's spooking me right now because I'm still up on my long-term position. I'm still up like 100-something%. And I don't want to give, that's my retirement account. I don't want to mess around with that money. Like I did with Shopify, dude. It was up at $90. I tripled my wife's Roth. And I just was a greedy little piggy. And I know. Shut up. I know. So full disclosure, he told me, it was like, we were like 80, 85. He's like, dude, that was a good trade. Good trade. Done. And I didn't do it because I'm a dummy. So as Farouk said, I also am just a simple man. But anyway, Tesla chart does not look bad. I think we see some strength here. I like the weekly. Last week, we saw a little bit of an influx, a little flick of that volume, which is good. We saw it back into the end of April. Also very good. The problem is sellers came in and really stifled this momentum that we saw in that second week coming off of that huge support test. So this is where we gave you the trade alert at $140. This is where the buy was indicated. Unbelievable. So free money. Again, just listen and do the deal. And you went to 190, so easy trade opportunity, but even better, you now have yourself a little bit of protection in terms of your margin of profit because it is unlikely it's going to come below 164 unless that vote goes the wrong direction. So I don't think there's much to cover here. I just want to do that chart real quick before we get into SPY, just in case people missed it. This is one of the worst things I think you could see right now. I hate this, like this little toppy top right there, just a little like weak ass, no expansion, tiny little guy. I hate it. Now, you go to the daily, it doesn't look as alarming, but then you go to the volume and you're like, oh, shit, this is not good. This was a fake new high. This is like for name only. Like, let's drive it to a new high, shouldn't we? It's like look at that volume.
No, so being a dead horse, well, clearly summer started early this year. You'll notice the trend like every year, June, July, August. It's just like low volume, whatever the trend has been. The first half of the year will continue through the summer months because all the big boys are in their beach houses just enjoying the summer.
But does that benefit us?
It does. That's what I'm saying. Because until volume comes back in the market, there will be no trend breaking at all happening. And clearly you're seeing that the past week of like the trend. We broke through V-shaped recovery. We recovered some key technicals. And we're just slowly churning far to upper right, and just party continues with low volume, and it goes the other way as well. Like during the beginning of May or end of April, like even when the bears were the market was retracting, there was no volume confirmation on the downward spiral. Like it was slight volume, and because of that, it had a V-shaped recovery because there was no resistance. And I'm still part of the camp where VIX is under $12. Elections in less than 6 months.
Yeah.
I'm buying some December protection to capitalize on that cheap volatility. And that's just the way I'm playing it because my portfolio has doubled in the last 12 months.
Yep.
I want to protect those gains when this up to the right we're seeing is not high conviction enough for me because I'm not seeing a volume follow through. But at the same time, I'm not balls to the wall bearish on trying to buy 1 month out puts for a 5% correction because I don't think that will happen.
No, you're buying insurance.
Exactly. It's just I'm being defensive, not bearish. There's a massive difference that people need to realize on that. Yeah. So my 7th month output, that's defensive. But at the same time, like if you're a bull, you shouldn't be pounding your chest right now because there is no confirmation on why we belong at all-time highs.
You just got nonstop trend. Like, look at that. It's just bumping.
Yeah.
Because there's no expression of market here at all. It's just all like it's autopilot. This is a robot. So now let's talk about that. So we have our 200-day EMA set up here. That's this thick red boy. You see just kind of trailing along here, right? This is where we played with fire. We came down, we broke bearish. Remember, we talked about 518 being that critical area back in April. We kept discussing this. If we don't hold 518, we're going back to $500. As you can see, nailed it right back to $500, actually below 494. And then we played around, we crossed back over until we got this bottom at 500, at which point both me and Shay were sitting here telling you we're probably just going to see upside. It doesn't make sense. It's stupid, but the market's holding up here. Buyers are coming back in low volume, but they're here, right? And there is no hard pressure from sellers to fight them. So it's kind of like sending an adult to fight a baby. It's going to be a fight, but you know who's going to win. So we knew upside was coming. It broke out. And then, as you guys should recall, when this was trading at about 504, so right here, we kept telling you, I love those 519s. Would you look at that? Boom. Ripped over 520, and then we tested the high at 530. Last week, we were trading right around here, 517, 518. We then said, hey, this could go to 540. It's stupid. Doesn't make any sense. But remember that the 540 is on the table. It shouldn't be, but it is. Remember, there is no point in having an opinion, you guys. You look at the data, you let that tell you what's going on, and you make a decision to protect yourself and benefit based on what you see. There is no prediction in that sense that like we know where it's going to go. We just know that if it goes up, here's where it's going to hit. If it goes down, here's where it's going to hit. And that brings us into our next little deal here. Let's quickly break down. Go ahead.
Keep the SPY, change it to the monthly chart. I'm going to show you my favorite metric that's kind of a secret that has been working. Do the 50 SMA.
Mine's so messy. Let me switch it to SPX. Hold on. Because I don't have all that shit on there.
This is the trend since September 2011 that has
You
worked.
Want SMA or EMA?
SMA. That has worked every single time. If I just want to clear, zoom out, if there's a couple of percentage correction, I want to see, all right, how far can it go? I can actually share my screen too, maybe if that would be easier.
Oh, wait, let me change the inputs. My bad. I got you. 50 off the close?
Yeah.
Okay, let me turn these off. So there you go.
Oh, actually, I'm seeing something here. Let me share my screen. I'm seeing something.
Yeah, just do that. That'll make more sense. That's some weird smooth move. I've never messed with that. I'm not about that life, dude. I got my 8/13/34 EMA deal, and I just roll with that.
All right, let's share my screen. Boom, boom. All right. Yeah, can you see my screen?
Mm-hmm.
Every single time since September, clear trend. Like this is when we broke out, September of 2011, which is wild to say because it's like, what, 13 years ago? But we were in a pretty big recession and we consolidated, clearly broke out here. Every single time I got close back in 2018, 2020, and this 2022.
Damn, we were like 20 years old.
That's what I'm saying. This is the OG chart that if you get any kind of panic out there, look at this chart. Look at this SMA 50-day monthly chart. It just zoom out, and this is the worst it's ever going to get. It will never break this, in my opinion, unless we ruin this bull market rally we're on completely. There's a World War III, some massive black swan that's going to cause like ripples in the whole market, which nobody can predict. But like, even like this is the bottom of October. Like that's all you had to know. When it touched this, you could have just made a massive, like what went from 360 to 520 within like 2 years. Like that's what it shows right there. But again, to go off the daily chart though, let's just do that. Look at this volume right here. It has, when was the last above average week daily right here? April. Let's do weekly. Weekly is a better term. Oh my God. December 2023 was the last time we had above average week green candle. That's absurd in my opinion. And that just like shows like we're chugging along. Like there isn't really any confirmation where
everybody's just like, you know what? Let's just keep this going.
That's exactly what it is.
It gets a little scary. It's like, should we indict him? Should we, you know what? let's talk about it. Let's talk about it in a couple years. Let's just you golfing Sunday, and then it goes right back to that. You golfing? I'll see you at the club. I'll see you at the club, and then they let it go. Print some more money. You know what? Let's just print a little. It'll be fine.
So I do want to call it on a daily chart though. SPY does look overbought. I use this. Don't use this as the only indicator you need. Use this as a tool for your decision making. It looks overbought, and it's been no volume past week, and it looks overbought. I really do think we get a pullback. It's not going to be like a 3 to 4%, but I wouldn't be surprised if we test the 21-day again. Where's the 21-day, man? 519, 518.5. Where's the massive volume shelf? 520. Yeah. I do think we do test 520 in the near term. That alone will give me a 2% pullback to continue the party. But with IV being so cheap and buying protection so cheap, that 2% move, you might make some bank on it because the IV is dirt cheap again. And the VIX will go up to 14 to 15 probably if we get a 2% pullback. And that alone will give you a 20-25% profit right away with the price actually barely moving, because I'm not going to get into the weeds of it, but IV essentially draws the contract price of the option. So that's the reason I'm saying like Wednesday is a massive catalyst for NVIDIA, just because that's going to give us the confirmation of will we just continue to the right, or will that give us the ammo we need for that pullback to 520? And will volume come back in the market? Because the only time volume has been above average, guess what it's been? It's been red days. Look at this. Boom, 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 boom. That's the days where we see that big pullback. And I think a lot of the bears are just waiting for that next catalyst. Like there's no reason to go in front of a major catalyst, because you'll be off sides. You never know. You don't want to be off sides because you'll be tilted. You'll become emotional, and you'll go away from your characteristics of being a successful investor. Like ask any degenerate gambler that you know, like when they get on tilt from the blackjack table, they go, or poker, they get off their game and they lose everything.
So I love looking at this monthly chart just to kind of accept within myself what could be. And also to know, like, dude, you never know, man. Bomb goes off in the United States. You know what I'm saying? Like, you need to know this shit, because, I mean, very different, and that's very serious, right? But, like, let's just say war comes closer to home, right? They get rid of, hey, let's not, playground isn't Europe anymore, in the Middle East, which we don't need to get in all that. But you got to know when market craters, where will it go? Because A, short on the way down, and also buy the long. Where do we do that? So I like to always be prepared. This is my version of doomsday prepping. Like, I don't have a bunker. I don't have dry food. If that occurs, I'm dead. And I need to accept that. But this is my version of that. It's the money doomsday prep, which maybe we should have a whole hour for that. 460 is first and foremost. I will buy 460. I will liquidate. I will take an equity draw against my house to buy 460. I'm not kidding. Like, I own a good chunk of my house. I will take out a couple $100,000 in line of credit, and I will put it into this. Whether you're not to it, sorry, bank. I don't know if you're not supposed to do that. Whatever. My second would be like 420 is pretty critical. I would buy that. 360, I would sell anything I owned in this world to buy. Because in my opinion, if we breach 360, you need those guns and food and water. There's a bigger issue at
play.
When
was the last time you had a 30% correction though? Like that, it's if
21. That. Oh, 30%. Excuse me. Let's look. I don't know. I was thinking big correction. Let us see.
That 360 level.
Well, this was 27%.
Oh wow, the bubble.
So,
yeah.
And like, if you look in the past, like 2020 was 27%. This was 27%. This little floater is where it gets weird. This should have been, in my opinion, this top here, mid-August last year, should have been it. However, it wasn't. And this is where I think like there's a bigger thing at play with inflation and the printed money. And I mean, not to get into like scandal controversy, but like I think dude, the people that run our government, like they're idiots, but they're not stupid, if that makes sense. Like they're idiots and they're not trustworthy and they're scumbags. But I also think that some of them there, as much as they're greedy little pigs, they do want the machine to keep rolling. And I think that they would be absolutely willing to do what they needed to do at these critical points in time to ensure that that occurs, right? Because we're lemmings. Most people are lemmings, right? And if the market says buy, everyone buys. It's what the institutions are making these like complex decisions. Like you're not like Michael Burry is the outlier. No one else is going to take a contrarian. No one else is going to take a contrarian position like that. They're just not. They don't have the balls. You're just not going to get that. You got a few that will speak out, like the Ackmans, the Burries, like those guys will say something and maybe do something, but everyone else, all the huge firms are going to play ball. Mm-hmm. If they say buy the dip, you buy the dip because, dude, you got your hands in their pockets and lobbying. There's a million elements to this. Just think of it in a small town scale, right? It's like the treasurer's paying money to the president, and the president's banging the secretary, so he can't tell anyone, and the secretary's married to the treasurer. So like everyone keeps this circle going so that we can all keep our lives going and our lives upheld, right? The same thing happens in our government. So I think that October, November, it was either A, ploy, or B, NVIDIA carried the water for the entire, it was like the reinvigoration of hope between crypto and NVIDIA. I think like it was either they led us to this new era where that little bit of optimism and growth can spur an entire move in the market, or combo that plus side dealings that keep the market propped up. Because right here, dude, this is so healthy. Ignore the volume. On a monthly chart, this tells me we're about to rip. We're going. Like that type of engulf is just, especially after such a strong move up, that's indication of like a bigger thing at play that we are going to explode. So like what I wanted to do today, so it's good, I'm glad we're doing this, is I wanted to look through, okay, when else has that occurred and what did we learn from that occurrence? And I would say that other example, and then we'll dive quickly into those options trades and do a little smash or pass. That occurrence was right here. And it was October, November of 2020, right? We hit our bottom. Everyone's scared. Buyers came back in. We pushed to a high. Everything about this looked like, remember, it's all relative, guys. This is what volume looked like through the mid 2010s, 15s, right? This is what volume looked like those next couple years. So this volume that we saw in 2020 was not anything to be blown away by, because everyone was looking at the late 2010, 2015s as the relative point of comparison. So they're thinking, shit, buyers are not really coming back. This is just a small bit. This should have been, this 330, this should have been rejection, test of 240s. Makes no sense that it wasn't. 0 cents, especially when you look right here. Look at the volume on this specific candle that engulfed before we ripped up to test all-time highs. Makes no sense, right? Now look at this. We're seeing the exact same thing on, I would argue, like diluted pop volume. You know what I mean? It's like a cup full of ice with a little bit of pop in it. It's like it tastes a little, you taste just enough, but it tastes like shit. Or you ever have it in the machine when the mixture's not right, dude? Like something's not right. But if you look at this as a technical analyst, everything about this says, wow, we're going to see 600. We're heading to 600. That's what it says, right? If you look at this chart, volume doesn't confirm it. So that's a little spooky, but I like to always be prepared as option 1, option 2, disaster, but option 3, I don't think we're going to get there. I think the lowest this market could possibly ever see is either this level, 460, because if it goes below 460, we're going back to the sub 400, either there or we never see it again, as Shay said. And I think he's probably right that we won't see it again. I wanted to just map this out. Like, okay, so once we saw this downturn, like we saw this contraction after a move up, right? Like you could use simple tools, guys, like Fibonacci retracement to just go through moves, always from the high to the low, never from the low to the high. And just look at how somehow this always will match up with your chart. If you take a big enough segment of time, Fibonacci is the golden formula of life. It is math extraordinaire. It's just taking the homogeneity of all things that are universe and putting them into a simple calculation that can be a visual representation for you. It's where buyers and sellers come to party, right? And these extensions are basically just telling you, if this continues, here's where the buyers will congregate next. So after this move, the retracement would have told us 397 was incoming, right? Hit. Next retracement, 491, hit. Came back down, tested. The next retracement after this strong move up is 584. 584.
And at that point, you go to the psychological level of 600.
Go to 600.
So yeah.
We can argue with this all we want. And if you guys are really trying to nail in on this, find like really significant points in time, like the 08 crash, right? And then do that same retracement from those relative highs to relative lows. And just, again, like my goal for this is to be so simple that like a child could do it. Find the overlap. Notice how this 3.61 extension of 396 overlaps with this extension of 397. That's how you know you're on the right track. If you could find the places in which they match up, you can get a clearer picture, right? Those are points of confluence. But I do think that for the SPY, because then we move up to this one, right? This is really where we need to keep our focus. 560. Most realistic target from this contraction, I think, would be 563. Now, I agree with Shay that like if we go 563, why not go 600? It's probably what's going to happen. But with this kind of move, I would never trade here, right, for a long-term position, but the move looks good. So let's get down to the hourly. We'll break this out real quick, do a little smash or pass. So I'm going to use the SPX chart because I have less garbage on it. So here we are on the hourly. Get rid of those fibs. We're looking at the SPX chart, which is same SPY, SPX, one and the same. Here we are, right? 522 is where we really saw this breakout. This is a pretty critical level here. Like this is where the market really said like, hey, I'm here and I'm staying. Volume substandard across the board. I don't think the volume's there to make anything interesting. Sell side on March of 24 was very interesting to be followed by that gap up. This is still where I go back to in my mind, I guess as a conspiracy theorist or someone who's paranoid. Where did this sell side come from? Why they wanted so badly to crush that 50-day SMA, right? We haven't seen that on the previous tests. But then we break out and we go higher with no significant buying. Mm-hmm. Why is that? Well, we talked about it. So the question is, if we're on the hourly, now let's break this into smaller chunks here. We're going to go to the SPY just because I think you guys are going to look at the levels and then people get confused and blah, blah, blah. So here we are. I mean, what is this called right here? I'll let you guys give you a second to leave it in the chat. What do you see in here? You tell me. What are you seeing here? You guys are the chart champions. What are you seeing? Come on. Give me a taste. Give me a shout. Leave me a comment. Come on. We got a lot of people watching this on X, and we're not getting any comments, guys. We want to answer you. The goal of this is to give you what you want, not tell you what we want you to know. So I'll just assume that no one's going to answer it. You got a double top right there.
I was going to say inverse head and shoulders.
So I would say possible, but I don't like when you get this roundedness, especially after a move up like that. I want to see more like sharp expressions of volatility personally. Double nips. I agree with Latvian. I like that. Double nips. I agree with that. I want to see more length because this is over 3 days. You know what I mean? I want to see
hourly.
more length.
I forgot. You're right. My bad.
I want to see more length, and I don't like any time. So we talk about this a lot in our trading education stuff. Whenever you see that roundedness, that spooks me, dude. Nothing spooks me more. Just so much as when you see that curl to the upside, nothing makes me feel a little better about a chart than that. So it just shows that like buyers are even running out of steam to test the limits. So that kind of tells you where you're at in terms of endurance, right? You got a team that's played 5 games in a row. They're just exhausted. There's nothing left. Problem is, as you mentioned earlier, it's a great point. There are no sellers to beat the shit out of them right now. Mm-hmm. So we just kind of stay and we're stagnant. Little bit of buying coming in. So the question is, I like to always, we didn't the last time, so I'm going to do it this time, is what's the options trade here? We're going to give you the bullish and bearish scenario. So there's absolutely no occurrence in which you lose. we have been successful at nailing 100% on one of these two trades every single week for almost 40 weeks in a row. So question it all you want. I'm just telling you what's happened. We have a pretty noticeable right there. 529 is absolute bottom, I think, before we fall out from below. Here's the levels that I really like. 29 and 28. So what do we do? How do you trade this? If you're trading options. Now, I would say if you're new, paper trade, don't mess around. It's going to be an absolute loss. You'll kill yourself. Just paper trade. Learn, master the craft, do it for 4 weeks in a row. If you're successful, go ahead. I think we're gonna get just kind of like a weak dick open. We're gonna get just a flaccid open is what I think is gonna happen. And we're gonna test this 529 and change. Now, once we test it, this is where it really matters. Does volume come in and do we get a harsh rejection, or do we just kind of putter? If we putter, I am 100% taking the bearish opportunity to trade down to 528 and below. I do think you have some strength here, 527. So look for volume swell to come in to keep this propped up. But I do think there's a bearish trade there to 528. Now, that's not a huge margin, but you could squeeze out a nice 15 to 20% on a quick day trade if you know what you're doing. I'm going to show you the exact options contract as soon as I break down the bullish scenario. So here's option number 2, which is our bullish scenario, which I would say that I'm kind of 50-50 on both right now just because this is such weak sauce. There's really nothing to feel about this. You do have these sharp expressions to the upside, which is like it's worth noting, right? That buyers did kind of run this up on absolutely no volume. So it's like breakout on one hand, but it's like absolutely no volume. It's like you heard the party was awesome, but then you also know that only 10 people showed up. It's like, was it really that cool? So if we can hold support and get a quick rejection, I think trading to 531 is the move, because I think we'll at least get a test of 531 and change, right? 531.12. And then we'll get rejected and get kicked back down. But it's still worth taking the 15 to 30% that you get on that options trade. So to do a quick hop, skip, and a jump over here to the good old Robin Hood. Let me pop in here. Let me switch this. Let's switch over. So we got to go to the SPY. All right, let's look, trade SPY option. So as always, guys, to those of you that are new and learning with options trading, I would strongly suggest to never mess around with 0 DTE until you are an absolute sniper. It's just going to be a loss. So why put yourself through it? I like to go at least 3 weeks out. I usually shoot for like 20 to 23 days. We don't have that. So let's look June 7th. Let me make sure that's a Friday. I really like targeting the end of week options rather than the Mondays, because you can wake up and just be totally screwed. I don't like that over a long weekend where a lot can happen. I want the least amount of time. So we're going to shoot for, I think we're going to go, is that June 7th? That's a Friday. So we're going to look at these. So remember, we talked about on the bearish opportunity, we talked about, was that 530? I think it was. Yeah, 529. So the 529 open interest, applied volatility, 10%, dude.
It's so weak. It's like if there is a move, you can make bank.
Yeah. What's interesting is, guys, when this IV is so low, the trade could go the wrong way. That it could go like you buy puts. Trade can go the wrong way, meaning the market's going up, but if your volatility is spiking, you won't lose any money. It's wild. It's a wild occurrence. So again, those that lack of experience, just open a Robinhood account and just add them to your watch list and watch. Just watch along with us. Track it. Get it to the point where you're doing this 4 or 5 times a week and you're doing well. Then you can mess around. So the puts I like is the 529 put expiring in 18 days. Again, that would be a day trade or overnight hold, depending on the price action. I think that just rewind the video if you needed to know what the bearish scenario looks like. Now on the bullish side, we talked about the 531, which isn't too much out of the money. A lot stronger open interest, implied volatility, nothing. Strong delta, which means this has already moved and there is already a little bit of appreciation priced in. I would say, looking at this, that going above 531 would be dumb, because you want this to end up in the money. That's where you're going to get the most premium jump. So for this one in particular, I would say the 531 is kind of your best option. Now, if it's too expensive, again, you can always open a spread, which is you buy this one, and then you go to sell, and you sell the strike directly above. It limits your upside, but it also limits your risk, and it lowers the cost to $56. So keep that in mind. So those are the two options in which I think the SPY will exist. I don't think we really see a crazy move unless we break. I'm going to flip back to the chart and then I'm going to move on from here. Unless we break 528 and change, that's the only way we're making a $3 to $4 move, at which point the 524 puts look incredibly attractive and would be a great opportunity. So that's what it is. There it is. And that's it. So now you have two options trade opportunities. You have the analysis of what the chart needs to do for each of them to be activated. You always want to use the 15-minute. You want to look for confirmation. Again, what does confirmation look like? Well, if look at when we were trading below our level of 529.76, we broke below, okay? And let's say we were waiting to buy the breakout. We don't buy right here. This candle breaks above and then closes. That's the buy because that's the confirmation. If you look, it ripped up to 531. On the opposite side of the spectrum, this is what a rejection looks like. 15-minute hits 531.43. Candle cannot push above and close. Next candle opens a little bit up. Downside, closes below that level. Look at what happens every time. If you find confirmation with the levels I give you on this stream, you will see a distinct pattern. Bottom, top, and then bottom, top, top, bottom. You can just trade these levels like you're playing fucking Pong and make money 100 times a day. That's my goal for you. So what would you say about that? I mean, next couple days, where do you see the market going? Just more of this sideways nonsense?
Exactly. There's going to be no fall there because of volume. It's essentially
patty cake.
Yeah, it's just like, it's frustrating. I fully I'm very sensitive to the fact where it's been very frustrating where you essentially had low volumes to any kind of move. There's gonna be no confirmation. There's no follow through on it. So it feels like we're just wasting our time and throwing darts that just aren't sticking. But at the end of the day, if you know these points that Oz just called out, you could still be making bank in the short term, like within the 1 day or 2 day moves that at the end of the week, market really didn't go anywhere, but still gonna ebbs and flows. And that ebbs and flows component that Oz just called out, you can still be making like 20 to 30% returns every single week. Yeah. And that accumulates after a long time where everyone's like arguing like, oh, SPY went nowhere for 2 to 3 months. Guess what? I tripled my money because I did the weekly plays. So have that kind of mentality and don't be so frustrated with the market going anywhere.
Yeah. Trade short term to build long term.
Mm-hmm. Yeah.
Put the most money in the things you are most convicted upon. Simple as that. But small trades, larger margin, that makes sense. Take 30%, 40% on a $200 position. Doesn't seem like much until you add it into a long-term position that doubles. Why not? All right, so we got some quick smash or pass opportunities here. If you guys want to type your ticker in the chat, if you're on Twitter, just reply to the post. You could still push it up there. I love that Twitter has that feature. Got our man Eric Turner here as proof that you can comment from Twitter. I appreciate you. Thank you, Eric, for showing up. We got official farmer Chuck. Awesome. Absorbing wisdom. Glad you're here, man. Thanks for farming. Keep it up. Don't let Bill Gates buy your land. I hope you're getting those carbon credits, man. All right. So we got one to look at quickly here. Hal, H-A-L. What the hell is this? Halliburton. Oh, no shit. I feel like you got an opinion on Halliburton. What is it? Defense.
I don't know. Oil is definitely not my cue, but it's just not my play. I'm not a commodities player at all.
Yeah. Halliburton. Was it just weapons and oil?
Yeah, I mean, I think it's more oil and gas, but
I thought it was more weapons.
No, it's like more the equipment, I think, for oil.
Is that Lockheed? That's all weapons?
Yeah.
Okay.
I'm talking about LMT, I think.
I thought Halliburton was like the black box Department of Defense contractor that builds.
Oh, no. It's for sure an oil service. I just don't know if they have any. I think that's purely what they're known for.
Isn't Dick Cheney all up in that? Wasn't that a Dick Cheney enterprise?
I didn't watch that movie. I should have watched that movie. I would have known.
That's a great movie, dude. You should watch it. I forgot who plays him, but they do an exceptional job.
Oh my God, it's Batman. What are you talking about? It's whoever played Batman.
That was Christian Bale, wasn't it?
Yeah.
No, I got to watch that. I might watch that. And my kids watch that. Just kidding. Look, I will say this. You got a long-term double top here. I also am not a big commodities guy. I have no idea. I am like absent. I have no idea what's going on in the oil and gas market. Like I couldn't tell you. I don't know. I don't care about it. It seems so boring. It's stupid. I just don't care. So I don't look into it. But I will say this stays north of 36.20. I'd give you a smash on this because you got an easy $5 move, easy 10% move there. Long term, I can't speak to that, but I would say that like you have a nice little level here. You had a hard push down, didn't get the rejection, but again, remember low volume, but you do have a lot of buying here around 35, 36. That looks like accumulation to me. Boom, 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 boom. Every time it hits 30 to 35, it looks like you're getting a lot of buyers come to the party, which means this might be a great opportunity to go long, take that 10, 15% with the stop in place and just let it ride and see how it goes. So I would say that was a decent one. I would say smash it above 36, get a taste of that. Might get toxic and turn around on you, but have a little fun while you're in college. Why don't you? All right, Riot. Very interesting. Oh, I did not know this was back down at about $10. As you can see, this one I've already got lined up. I got my levels already here. 1030, 15 to 21.
I mean, I like Hut more. It's a similar ballpark as Riot, but Hut's looking like a more interesting formation, in my opinion. Especially at the
similar chart.
Yeah, very similar chart, but the 200-day, they're right at it right now. So I think this
look at
is
that.
aligning with the volume shelf too, where it was fly.
This is a fun one. Oh, I like. Yeah, we're gonna pass on that Riot, and we're gonna go right to this one because I think it's. I would agree if he's probably done. You've done the research on this one. You're on it. You love it.
I don't participate in these kind of companies, but I do chart for fun, and I saw this was a movie today, so I charted it today. So that's why I know on top of my. I was like, oh, this looks interesting. Like once it clears 10, it's going to go flying.
Yeah, but you have some wonderful inflows here, and you have a long-term consolidation band. Like that's beautiful. Basically north of 779. So you take $2 risk here. Your upside is 3 to 18. So your upside's 100%. So basically you risk $2 to make 9. I'll take that. That's appropriate risk. For those of you that didn't, go to the Facebook group, check that post I wrote. I basically broke it down for you why, all the shit you hear about I bought the wrong stock at the wrong time. It's none of that even matters. It's that you just didn't appropriately allocate risk to reward and you didn't consider it in the trade. You should be following this protocol to where you only have to win 40% of the time to still be net profitable. Think about that. If you're only right 4 out of 10 times, but still making money, how happy would you be? 3 to 1, baby.
And also,
I won't risk $1 unless I'm going to make 3.
I would participate on this trade when I saw it this morning if it wasn't for NVIDIA. Again, I'm on the sidelines until NVIDIA reports because growth portfolio, my stocks are going to move like 20% probably next like week or so.
Okay. Target. That's a big one. How you feel about that? This one already got mapped out. I know that until we get, so we were buying this below 120. We were buying this down to 111, 113, whatever. It ran to almost $200. 171 is like critical here. How do you feel about Target from a fundamental perspective?
Fundamental perspective, they're kind of fucked in the near term. They just made an announcement. They're putting their prices like for 5,000 of their items lower.
Just saw that today.
So like I've been very adamant. Like I don't want to be in consumer goods stocks at all. Like the only consumer stock I'm in is Celsius because that's explosive growth. But consumer discretionary spending is just beginning of the pullback. It's going to be so severe for multiple years. I always said XRT is a great short for for a year or so of just like playing that because consumers aren't improving. Like what's going to improve in that side of the business? Like we're all going to be making money somehow, more money.
Ooh.
No, it's just, I really don't like, I just like, I think the retail space is in the beginning of a brutal multi-year bearish engulfing period. Like it's just not a place to be in.
Oh yeah.
TTT, it's just there's better places to make your money. Like don't try to be in Target because I think Walmart's going to be the only company succeed in this retail space. Everyone else is just going to be suffering, consolidating, diminishing their prices, like we just saw in Target, just doing a bunch of noise, throwing darts to try to trigger the consumer behavior to be buying their products. But at the end of the day, consumers are struggling and it's going to get worse. So I'd say pass for sure.
I would agree with you on that. So you're absolutely right. Look at that. Anytime you see inverted hammer in consolidation or attempts at upside, you're going down. StocksBuddy, again, just go to StocksBuddy.com if you want to just get this. You could just know. Second, this breaks below $71, we're going to see low 50s, maybe even lower. I think there's a significant opportunity to short this to 46, dude. It has been riding that 50-day, but I think there's an opportunity to short to 46. So I'm gonna agree with that pass. ASTS, never even heard of it.
What a move ASTS had.
Base Mobile, what's that?
It's a satellite company for telecom for the space. So,
oh, is it Space Mobile?
Space Mobile.
I like Space Mobile better, so I'm gonna.
Yeah, I mean, I own the stock. It's like a 0.0. It's like half of 1%.
It's a fun spec. It's a lotto.
It's a lotto because if management what this says is actually going to happen in 3 or 4 years, this is going to be like a massive stock. But corporate governance is not obviously a priority for this company. Non-existent. They've constantly not lied, but manipulated the trust of retail. They've pushed back delays. One instance was like 6 months ago. They had a massive deal announced with the AT&T after market. Guess what they did before the market opened the following day? They did an offering. They didn't even give it a chance.
True small cap.
Exactly. It's just like, oh my God, you don't do that. It's like golden rule. You don't pair a promising partnership deal with an offering right away to offset it because you're screwing over shareholders. So anyway, this name is short squeezed because again, everyone was shorting this name on $3 because they're pushing back delays. They need funding. Like they need funding in the next 6 months. There's going to be dilution 100%. But they had a really promising announcement at AT&T a week or so ago, and that caught off everyone off guard in a short squeeze. Having said that, they will give back their gains. There's nothing fundamentally that's going to be proving this move. I think their contract was like maybe gave them a couple months runway. At the end of the day, they won't be making money for multiple years. It's just going to be a dilution machine. And if you guys want to see a stock that's similar fashion, that's just as promising, look up Plug Power, PLUG. Not a real company, Plug. Hydrogen.
I've had me some Plug for a while now.
This is a dilution machine promising the world for hydrogen, delivering nothing but dilution.
Yep.
I'm worried that ASTS is in similar fashion. I could be proven wrong. Still own a very small position, but I think it's going to go back to $3, $4.
Yeah. I think the hydrogen play is real. I just don't think I agree with you. This ain't it.
Mm-hmm.
So interesting. So real quick, if you found this helpful, you've liked what you've heard here. We don't ask often, but if you would help a brother out, help two brothers out, hit us with a heart on Twitter, retweet us. If you're on YouTube, just give us a like and a follow. We appreciate you. It helps us, helps the algorithm, tell the algorithm that we don't suck, which I always appreciate because the algorithm doesn't enjoy me, doesn't enjoy my presence. So moving on, we got VSAT here. No idea what that is. I love when they bring up ones I've never even looked at. Viasat. Downtrend. I don't even know what this is.
Funny. Is this the same person who suggested ASTS?
I don't know.
Yeah, it's a satellite company. Guys, Starlink won. They're the satellite of the future.
Agreed.
So I think don't bet against Elon's companies that are clearly the moats. Like you've seen what the EV space has done.
There's just way better opportunity elsewhere if you want to bet on the future. It's not
exactly.
Here. We're knocking these out. Run, son, run, son, run. This is a fun one. I've made a lot of money trading this thing, so it has a fond place in my heart. We've played this 9 to 20. I don't know how many times. Again, technical trade. I love it. Easy ad right here. Harsh cutoff, right? Firm stop below $9. Because look, anytime it's been below 9, it goes to 485. We've never had an occurrence where it goes below 9 and stays at 890. It goes to 485. But it also should give you confidence that you've got a pretty firm layer of support there at $10, where this could be an easy position trade to double your money. At the very least, 50%. This is not a long-term, own it forever, hold it dear. It's position trade. Buy 10, stop below 9, sell at 15, 16, 17, 18, 19, and 20. Set it automatically. I think this is a trade you can literally automate and make a killing. So that's just what I'll say about that. Eric Turner asks TXRH. Texas Roadhouse? No way. What? Dude, how?
There was something that came out today. I forgot. Was it their earnings?
But like, what is this?
You never heard? It's a restaurant chain.
I know, but like, dude, how's their chart just booming? That place sucks.
I don't know either. That's wild to me.
Look, they're everywhere, and I feel like there's never a part. Well, so kind of like this one. It's kind of like Golden Corral by this one that's like by the hardware store by my house. It's like I feel like that place is always full somehow.
So this is the perfect example for Texas Roadhouse, why it's succeeding when all the chains like the Chili's, the macaroni grills are failing. They have zero debts on their balance sheet. They have no worries of fulfilling the obligation of these loans. Because of that, all these other competitors, like they're just solvency risks is increasing and take advantage of space and like the demand from customers in the same kind of realm of category of restaurants where others are failing and closing down. They're expanding because they have no debt. They have no obligation to pay it. Because of that, they can expand when everyone else is contracting. That's the only reason they're doing well, in my opinion, because everyone else is failing. It's at the tax of everyone else. And they're going to be not the last one standing because restaurants aren't dying off. But this kind of restaurant, this breed of restaurants, they are slowly dying off, if you notice. Like, that's not the appetite that America really wants anymore. But Texas Roadhouse, fundamentally, they have a amazing balance sheet compared to their comps. And you're seeing it reflected in their stock action. Interesting.
I mean, StocksBuddy loved this at 95, so you could be up almost 100% if you're using this bastard. Stop loss is set at 163 for it to continue, so I'll leave you with that. And you do have a little bit of buying, but I'd say this extension is far too much and something that I couldn't possibly see exponential growth in the next couple. Like, there is no world in which they compound 100% year over year. That's nuts. That's nuts, isn't it? Don't you think that's crazy?
Totally.
But all right, let's see one or two more. What do we got? I'll do CLSK. I've made so much money here, dude. Oh, it's one of my favorites, dude. One of my biggest winners. Back when I don't know, when I first started trading, dude. I think this is when this was still OTC. I was on some like newsletter list, whatever they were talking about this, promoting the company, blah, blah. I was buying this like $6-7 and it went to like 100. So I didn't know what to do. I didn't know shit back then. It was like 2017, 2018. This boom, didn't know shit. So when this came back around COVID and it was uplisted 160, I just remember that like, man, this thing could move if it gets going. And sure enough, we took this from like $1.50 to $40. I mean, I got out about $36. I'm still holding 400 shares, it's like a little token. It's a memento, if you will. When I make that much, I just keep like a couple hundred shares for shits and giggles, just in case. And look at that. They start to actually make an effort to build a real business. Institutions start taking interest. Volume starts coming in. We're trading pretty consistently above $7-8 with a multi-billion-dollar market cap.
So, I mean, if you want to look at CleanSpark, all you have to do for CleanSpark, look at the weekly chart, 21-day EMA. Just follow that, and you're going to see the price action go. Having said that, there's heavy heavy volume in 1750, so that is a good resistance if it goes back down.
Oh, you got that volume shelf? Pop that on here. I always love seeing that. It's always nice visual to see.
Present.
Oh, 2,000 people have watched this. Hell yeah.
All right, so this is the weekly chart, 21-day EMA. Look at this gorgeous, just bouncing perfectly. So that's clearly the new characteristic of Clean Spark in 2024. So don't bet against the trend unless it changes. Like just this is clearly the trend. So follow this. But this volume shelf, I'm saying from the bottom of November 2023, clearly we broke out over here. Look at this gorgeous candle, like back to back to back. Like this is clearly where I want the VWAP to be in the volume shelf. You see this trend holding up. The volume shelf right here is 17. Like $17 is a great volume shelf. So boom, this is nice. Like worst case, you might revisit this. Like might go over here and just like catch up over here. And then as soon as it does, boom. Look at that volume. But if you want to expand even more, let's just go.
Dude, they built that base. Like I feel like they've really locked that price in there.
I think so. I agree with you on that.
And you got look at that massive cup and handle. I mean, you're talking like
it's insane.
The more time you look at, guys, and you look at these patterns, the more you can validate them.
I mean, geez. Yeah, I mean,
go to $50, man.
It really, that's the thing. If crypto goes on a rager towards 100K, like Bitcoin, this thing is just going to rip. But the issue is, I've been told multiple times by people in crypto, like miners aren't really where you want to be, but it's a great vehicle to trade. Just trade it.
Hey, man.
So, but like look at the volume. Like it's nice. Like nice to see. Like this red. I don't love the red weeklies back to back to back. But look at where stock went. It was consolidating during those 3 straight weeks of. That's fine to me, in my opinion. And this candle is
that
gorgeous.
RSI, dude. That shit is tuned up. You got a nice, just a nice crisp 60 on the weekly with a good setup. I'll take that any day of the week.
Should we go? Oh, I guess we shouldn't talk. What's the next ticker?
Dude, Pop Pan West. Let's do it.
All right, so Palo Alto. Let's talk about this. So they just report after the market. Every cycle, Palo Alto is always the first cybersecurity name to report in the earnings cycle. So usually they have waves across the whole industry with their comps. Like I'm sure you've seen CrowdStrike's down 2%, Zscaler's down 3%. Palo Alto's down 8 to 9% after hours. Why is that? They had a strong print. They beat the top and bottom line. They're a blue chip cybersecurity company. Data is about to explode due to AI. And what do you have to do with that data? You have to protect it. So why is Palo Alto pulling back? It's because they're having a weak billings guide. And their guide wasn't as they missed their guide slightly, or you can just say it's a break even. Fine. But with their current valuation of like when they gapped down, what was it? 270. They recovered a decent amount before this recent print they had today. And I think the expectation during this was gap down was, all right, maybe they sandbagged it. So we anticipated guide up. We didn't get that. We got meet slightly lower guide. And that scared off people because guess what? CrowdStrike is executing at all fronts. And that's the tier 1 cybersecurity name for me specifically. And if CrowdStrike's thriving, and Palo Alto is having 3 straight quarters of disappointing expectations, maybe they're not the blue chip cybersecurity stock that a lot of people were hoping them to be. Like they're still a dominant tier 2 player, but maybe they're losing their juice because the issue with Palo Alto is they've always expanded via acquisitions. Like they acquired interesting products and companies to fulfill their suite or their platformization, where CrowdStrike organically did that. So right now they have like massive adoption on CrowdStrike for 7+ modules, where a lot of the Palo Alto's business is legacy hardware that's turning into a platformization. So like they're trying to become the platform player like CrowdStrike initially has been right away. And because of that, they're experiencing some headwinds on just not growing organically. And because of that, there's not as easy time growing and having the margin expansion story because they're having to spend these money to acquire these companies.
Oh, they're fucked. Look at that chart, dude. They're going to fade that down. Look at that.
That's
you beat
the
me
most
to it. Vicious candle I've ever seen in my life.
So
that's murder. It's murder. They're done.
Where's the bottom on Palo Alto stock? Let's see.
Nowhere.
Actually, no. Let's do this. All right. So clearly, let's do the 40-day. The 40-day was respected last gap down. Look at that. Perfect. They were down 20-something% that day or that week. This was a nasty candle. Got respected on the 200-day on the weekly.
Murder.
Now, so where's the weekly now? 282. That's where I would. All right, let's see if it holds, because last time this broke this trend, it's been a while. Like if you look at before then, like they respected it from 2020 the whole time. Ooh, bad story. That was what used to be support, now is a resistance. They broke that trend. Look at this, like boom, boom, boom. That's
hit CrowdStrike. Look at that chart. I just in comparison. I mean,
oh my god.
Yeah, it's a no thanks.
That's the thing. Like cybersecurity, there's gonna be a massive consolidation industry in the next like 3 to 4 years, like next 5 years. Massive. Why? Is because a lot of these products are getting duplicated, and a lot of the enterprises, they want a centralized platform that has a bunch of products, so they have to like go through so many different vendors, because it's such a headache. If you're a CTO, you have to monitor all these different kind of companies and platforms, essentially for protecting your data, when you rather just go to the source or one person and just like monitor that. And you're noticing then the theme of platformization. That's a new word that's coming to light in the past couple months, because in the cybersecurity space, because that's exactly what CTOs want. They want that platform play. CrowdStrike is proving that's they might be the only platform cybersecurity play. I know it's such a bold, polarizing statement, but you're seeing the module adoptions that they have. You're seeing all these new features are growing triple-digit percentage year over year. Their cloud security is growing like 140%. Log management is going like 140% as well. Like they're just growing at such a scale in a similar fashion that, like, I won't say NVIDIA is growing because it's such different industries, but like, you see the velocity of these best of breed names and secular growth themes of how revolutionary it could become if you choose the right winner. CrowdStrike is the right winner, in my opinion. I got in below 100. My average cost base is 120s. They had everything I wanted in the all-in-one cybersecurity platform for enterprises, and they're validating it every quarter after quarter. And because of that, I don't want to go for like number 2 or number 3. Like, yes, Palo Alto was the blue chip cybersecurity player. They're not anymore. It's a different environment. Like, I'm sorry to say, like, AI changed the game. The legacy hardware space isn't as sexy as it used to be in cybersecurity. I'd rather go for CrowdStrike. So CrowdStrike is going down 2% from this earnings action. So, like, where should you buy if you want to capitalize on it? Well, look at this. Their 21-day EMA got respected on the last time they dipped.
That monthly chart is disgusting for CrowdStrike. The monthly is like disturbing, dude. Look at that. Whoo.
Oh my god. This once, dude. Look at, all right. So essentially what you go on, let's just see this. Whoops.
Yeah, this
right there. So
yeah, this stays over $300, dude. It's gone. Gone. Bye.
100%. I mean, dude, this is a monster.
Put it on the board. What's their forward looking? What is it? What are they expected to make this year? What's their earnings expectation?
Let's see this.
Is it going to be a growth here, or is this a consolidation here?
All right, so let's just say CrowdStrike. Here's CrowdStrike right here. Perfect example of CrowdStrike. Let's see, PNW.
Oh, dude. Hold on.
Yeah.
Hold up. Look at this real quick. Let me just pop this on here real quick. Look at that. Predictable growth through 2025 after what? 4 successive beats?
It's expansion. That's just
fuck. This is one I feel like I have the most FOMO I've ever had of any stock. Don't own any of it. Feel like an idiot.
All right, can I just tell you something about a CrowdStrike, which is absolutely wild? So in the software space or cybersecurity, terminal rates for free cash flow is always 30%. Like that's everyone's goal. Like eventually down the line, like 7 to 8 years, it'll get to 30%. CrowdStrike has been at that since 2020, while growing the top line 40+%. And guess what they just announced last year in Q3 during their investor presentation, that investor day? Their terminal rate for free cash flow will go to 40%. They're going to be printing cash. And what's their top line going to be for the next 5 years? A 28% CAGR for the next 5 years, combined with a 40% free cash flow margin. This is unicorn status. And you're seeing the respect it deserves now, because that combination is, in a non-cyclical company, is unheard of. But CrowdStrike is proving they belong this unicorn status, and they're going to go to 500. They're going to probably go to
break that. That's a good example to break down just for people that are new. Cyclical versus non-cyclical.
Yeah, so cyclical. It's a dumbbell method where Tesla and EVs and hardware companies are always in a cyclical ballpark. Why is that? Because a lot of pull forward demand happens. Like when you see something like an AI, you see all the ChatGPT moment happen. Everyone wants to kind of have an AI component in their business. What's the number one thing you need in AI? The chips. So everyone's going to be going gun ho to get all the demand, as many chips as possible in the beginning to fulfill the demand down the line. NVIDIA. And because of that, down the line, it's going to offset itself. It's going to balance itself out and go towards the mean in like 5 or 6 years. Who knows? But because of that, all the pull forward demand is going to be really aggressive, but it's not going to be sustainable because there's no recurring revenue because of it. Everything I just said, all that revenue is from pull forward demand, and it's going to normalize itself. EV space, Tesla, consumers aren't buying cars. They're worried about paying their next month's rent.
Right.
Because of that, Tesla car demand is lower, but as soon as the economy gets better on consumer side and rates go lower because more affordable buy cars, they're going to see that demand get back up. So that's why CrowdStrike is part of the software space where it's always recurring revenue. There's no dictation on consumer demand, 10-year yield, pull forward demand, because if you're going to use CrowdStrike, you're going to always need to protect your data every single month. You have to protect your data a ton 1 year, but then
it's an ongoing expense. It's like hosting your website. It's just accept it. It's happening.
So because of that, the valuations are based exactly, because right now, like cyclical company, you want to buy when they look expensive. Tesla looks stupid expensive right now. That's when you buy in a cyclical company. NVIDIA looks stupid cheap right now. That's why a lot of people are like a little hesitant. Oh God, I know in a cyclical company you're not supposed to buy when it looks cheap. Issue with NVIDIA is like nobody knows how long this side of the cyclical business is going to last. It could last 6 more years. That's the issue that a lot of these bears have. So that's why you have to know this information. That's why it's like, so I know, I understand it's such data bomb and overwhelming, but that's why Austin and I are here to teach you guys all these like little one-on-one sessions.
100%. I mean, it goes exactly to the point we're making. Like, we're in a new world, and like we need to accept that. Like, no one had ever traded through pandemic, war, second war. Pandemic comes back. We printed an unfathomable amount of money. What do? People locked in houses. Like, no one had traded through that. Like, they've traded through a financial crisis. They've traded through a real estate crisis. Like, people have traded through those things. They've traded through just war, but never all of those things all at once. Not to mention 10 years ago, the 40% of the volume in the market that is made up by retail money that did not exist 10 years ago obviously had no impact on the market. Algorithmic trading has been around a little while, but it did not have the impact it does now. So we are living in an entirely new world. I think, is it Moore's Law? Is Moore's Law the one about the pace of technology, that it basically contracts the amount of time for new developments, which puts us in like, dude, it's like, it doesn't make any sense.
It got broke. It broke. Moore's Law got broken. Yeah.
This is new. No one knows. So we take what we can know, extrapolate from there, and make, I would say, what makes a good investor and trader. And if some of you may relate, I'm going to assume this about Shay because I know it's true about myself. You're always a good guesser, weren't you? Like, if you didn't know an answer on a test, you're good at using deduction to say this is the most reasonable answer. And you probably didn't study that much. Same. I was just a good guesser. I was not like prodigy. I was just good at guessing. That's like, I don't know how else to explain it. I think that's what made me good at this in the beginning. I could see a pattern. I could then take that pattern, copy, paste, look forward, and say, this is probably what makes sense. And sometimes it does, sometimes it doesn't. But the point is, like, some people freeze and they can't guess, and then they just choose like an extreme answer. I shoot for the middle. take my guesses, combine them, and I figure it out. So I think for stuff like this, with the amount of intangibles that exist, find the constants that you can wrap your hands around, your head around, whatever. So it's like what he just said, CrowdStrike, right? He just said CrowdStrike, recurring revenue business. Okay, everyone knows what that is. Do you have Netflix? Okay, then you understand the business model. That's good. You need to understand it. The Warren Buffett method is the method for the reason, for the right. Sorry, it is the method I think that everyone should use because it just stands on reason. This company makes sense. I could see this growing in the future. And then you look at the business and go, they're doing a good job at executing it. Okay, all right, simple as that. CrowdStrike, you're always going to need to protect your shit. It doesn't turn on, turn off. You pay them every month. More businesses are expanding their online presence, and thus there is a need for cybersecurity. They're in the best position to deliver that suite of tools and platform. Their earnings growth is expected to be pretty explosive over the next 4 quarters. They have a history of beating that earnings growth in the past. That's how simple this is. I think that was probably the most clean example I've ever given of like why this would make sense. All those things are common sense, and it is overwhelming. But the point is, common sense, guys. That's the goal of this. We're pushing up against 5:30. Final thoughts, my friend.
Yeah. Final thoughts about this. Let's call out Amazon. They're the leaders, AWS of everything. They said only 35% of people are on cloud. The rest are on premise. That just shows a runway cloud has still. And if CrowdStrike has these kind of numbers now in the leadership, it's stupid. It's like finding Apple. It's like in the early days. Like this could be a $1 trillion company because of how important it will be to protect the data going forward. And if only 1/3 of the people are on cloud, the 2/3 still on premise, they need to go in the cloud. That's an insane amount of runway. And I just told it like it's stupid. And I think any kind of pullback CrowdStrike has, it will have that V-shaped recovery like NVIDIA has and like Microsoft's have. Like they belong in those best of breed names. It's a beach stock that I buy and go on the beach and forget about it because I know it will deliver.
Yeah.
Amazon, like first, Amazon's one that got away. I didn't realize the margin leverage they had. Like this is going to be the most valuable company in the world. I'm so confident in it. It's this, Microsoft, Tesla, Apple will be 4th, but those 3 names will always be fighting in by 2030, in my opinion. So
agreed, dude. It is. Amazon is something else. Yeah. All right. You guys have it. I mean, I don't think you can be put more simply than how he just did, you guys. I mean, like, for instance, 30% of the market's on cloud. That means there's 70% of the market that's not. That should be and will be. So it's just who's going to get that customer. All business is get a customer, keep customer. That's it. You know you have a good business if you're good at getting customers and you're good at keeping them. That is the business. Even if you do, we do software. No, you get customers, you keep customers. Core focus. I have been confused many times in all of my businesses forgetting that core thesis of business. But every time I come back to it, it's like, oh, that makes sense. It just does. Because if you're getting new customers, it means what you're doing is attractive, inventive. It's something people want. If you're keeping customers, it means you're doing a good job at the thing that they want. Boom, done. Problem solved. So let's teach you how to do this the right way. We're here every week. Mondays at 5 p.m., Fridays or 5 p.m. Eastern every Monday here. Fridays, 3:30 Eastern here. Beginning a week, end a week. We set you up for the week, we recap the week, and then we set you up for the next one. Simple as that.
And Friday would be an insane session because of what's happening on Wednesday afternoon. So do not miss the Friday recap.
Yeah. So if your intent is to make money, we're telling you, hey, we've done it. We continue to do it. We're showing you how and proof. We have a system devised so that you don't have to think too much. And we have helped build the system in which you need to live in, which is, again, appropriate risk reward and managing your positions. And now we also have this wonderful community, again, over 20. Shout out to everybody that came here. Like we had almost 2,300 people watch this. So our Discord community alone is like 40-something thousand people. So there's people of like mind, of sound mind that are good at this, that will support you in it. It's everything you'll ever need. That was the goal. So I love you guys. Stay blessed now. Bye-bye. Blow you a kiss.